Given it rose by more than 10% during June, just how much higher can the gold price go? I'm David Jones from Capital.com, and this is our monthly update for the price of gold. We saw a massive move for gold in June. So in this video, we're going to just have a quick catch up with what the price did. Then we'll look at the reasons why we saw gold move so strongly. Then we'll get back into the chart, look at the levels to watch for the month ahead, and also place a trade for July. So make sure you watch the video to the end. Of course, if you've got a different view on gold, if you want to tell us where you think it's going, or you've got any suggestions for how we can improve our content for you, just leave us a message in the comments down below. But let's get into it. Let's have a quick catch up with what the price actually did during June. Let's do a quick look at the gold price before we get into the detail a bit later on in the video. So the move really started end of May from about $12.80 an ounce, and you can see by the 25th of June the price had moved almost as high as $14.40. So we saw a $160 move for gold throughout June, the first three and a half weeks of June. You know, sizable move, around about 11%, and it's been selling off the last couple of days. We'll come back to this in a bit more detail, but first of all, let's get into the reasons why. Then afterwards, we'll look at where the opportunities might be and look at placing a trade. So that's a really sizable move out to 6-year highs. But why did gold move so far? I think probably the main thing was tensions between the US and Iran. We saw that a US unmanned drone was shot down during June. Iran was claiming it was a spy drone. The US ratcheted up the war of words in its response. According to President Trump, they were ready to launch military action, but stepped back at the last minute. Clearly, when we see geopolitical tensions like this, investors tend to look for safety. The classic safe haven destination is gold, so that definitely helped give a massive boost, I think, to the yellow metal in June. Then we've got these ongoing trade war concerns between the US and China, increased tariffs, all those sort of threats. We do have the G20 meeting, and we're hoping that maybe we'll see some sort of resolution there, but that also helped. And on top of all of that, we had a weaker dollar during June. So if you treat gold as any other currency, let's say the euro or the pound against the dollar, then a weaker dollar means the price of gold normally goes up. So all these three factors contributed to that massive rise for gold during June. But what next? Let's take a look at where the opportunities might be, the levels to watch, and place a trade for July. Let's get into it. So let's get into a bit more detail about what's been going on with gold. We've seen this recovery since August 2018. We were talking about it in the last video. And into the end of May, we come back to this trend line. This trend line has done a good job. We've got 1, 2, 3, 4. It's the fifth touch, end of May. And I was saying back then, look, if this trend is going to remain intact, then gold really needs to get a move on. So the expectation was for some sort of strength to come back in, but probably not the strength we were expecting. Let's see what happened next. And there's the move from the end of May, from this 1280 area up to 1440. Just to put this into some historical perspective, let's take the chart out for a bigger view. So the beginning of this chart is back in 2012, when gold was about 1750 an ounce. And you can see I've changed this over now to weekly candlesticks and trading up to 1440. That's the best levels for the gold price since May 2013. So we've seen a 6-year high for gold during June. It does look a bit overextended, I think, up at these levels. That doesn't mean it can't go any higher, but look at this. On the weekly RSIs, we are pretty much the most overbought we've been in many years, sort of surpassing the peaks from earlier this year. If we look at that overall trend, it does look a bit overextended from that trend. I think if we're looking at longer term targets, if we think the price of gold is going to continue to recover for the rest of 2019, I think the next immediate logical target, these highs, April highs 2013, up around about $1,500 an ounce. So it is still strong, but it's maybe a little bit overstretched. Let's look at where the opportunities might be if gold starts to slide. Where can we think about buying back in? So we've gone back now onto the dailies. clearly, if we had weakness back to these old lows from late May, around about 1280, that does look like a great opportunity because we're back on the trend. We've got obvious stops below the lows for the year, around the 1265 mark. That would be a good place, I think, to have your stops below. If we start trading below there, it looks like this recovery since August is over and the risk is for a much deeper sell-off. But for now, I think any weakness, even back to this old support here that was left on the way up around about 1320, again, that still looks like, I think, good support if we did see a much deeper sell-off from these levels, a change in attitude by investors. But let's take a look at the short-term chart and pick up on levels for maybe shorter term traders. I flipped this over to our hourly chart here. We've got, again, good short-term support, third week of June, around about 1375, 1380. The last couple of days, it has held above 1400, and you would expect that to be some sort of psychological support. So I think, really, in the short to medium term, the risk is that maybe we'll see the gold price under some pressure after such a significant rise in June. But any deeper weakness still looks, I think, to me at least, like a buying opportunity. It's just we want to see it hit some support levels and see the buyers come back in. So 1400 first, then maybe back to 1375. After that, bigger support down here from mid-June around about 1330. So watching really for the opportunity to buy the dip. Let's just place a quick trade just to show how this all works. Let's say we were going to do a trade on gold at the moment. And what we're going to do, let's say we're going to buy it here. We're going to buy it here, assuming that 1380 to 1400 is going to hold. What I'm going to do, let's click on buy to bring up our dealing ticket. So we'll click on that. I can trade it from as low as 0.1 up to a maximum of 10,000. I'll do the smallest amount just to demonstrate this. So we're going to do 0.1 on gold. Our margin requirement is £5.53 because it's a small position. I'm going to say I want my stop loss somewhere at the other side of these lows from the third week of June. So let's say I'm going to go 1374 for a stop. Let's set that up. So we'll put our 1374 stop in. That's in there. And now we're ready to go. Of course, it's important to emphasize this isn't trading advice. We're just doing this just to show you how you might place a trade on these various markets. I think it makes the videos a bit more interesting. We'll click on buy and you'll see bottom left, there we have our gold position opened up. And to track this, all I need to do, if I go to the portfolio button on the left-hand side, click on that, you can see there are a few trades in there already from other videos that we've done, but here's the gold trade. So right down here at the bottom, gold spot, buying 0.1, opened it at 1405. My stop is in at 1374. That's my margin requirement, and that's my overall profit or loss, which updates in real time. So we'll come back to this in next month's video and see how it's fared. But I think overall, we've seen a strong month for the price of gold. Perhaps a bit overextended up here, looking at the RSI on the dailies. So vulnerable to a correction, but still expecting buyers to come back in on any weakness. It's going to be an interesting month ahead, I think. Let's take a quick look at some of the levels to watch. Going right from the top, resistance levels. Going back to March 2013, 1,615. That was the high for gold. After that, April 2013, 1,489. So that's ahead of that 1,500 big level. And then after that, the more recent high we saw in June, 1,440. So I think there are a couple of, three big resistance levels to watch. On the downside, the support closer to where we are now, but 1,382, the 21st of June lows. After that, 1340, the 18th of June lows. And I thought I'd put it in there because I think it's an important one if we get a bigger sell-off. 1265, so $1,265 an ounce, and those are the lows for 2019, so the year so far. So I think some key levels, long and shorter term, to keep an eye on there for gold. So it does look a little bit overstretched up here, but that recovery from August is still going strong. So I think for now, any weakness, it wouldn't be surprising to see the bulls step in again. To never miss out on the content we produce, make sure you're subscribed to our channel. And if you click the alarm bell notification thing down there, you get notified by YouTube whenever we upload new content. That's it for this month's update on gold. So from me, David Jones and Capital.com, good luck with your trading.
you.